Bhargav, small caps had a very buoyant times, if I may use the word. Good times after a long while. We saw topsy turvy small cap in first half of 2023, and after that there has been no stopping. There's no looking back. What do you think is the reason why bull run continues in the small caps?
So yeah, Siddhartha, small caps, if you look at CY23, was up almost 50%. And compared to that, large caps was just about up 20%. But if you think slightly from a long-term perspective, the balance sheet quality for small cap companies has undergone a significant change. So if you look at FY20 to 23, balance sheet which had a net debt of about 1.4 has now become 0.2.
Wow.
So effectively, companies in small caps, you can arguably say, have become debt free. And why has that happened? So if you look at free cash flow generation over FY20 to 23, there has been almost a 51% growth every year on free cash flow generation. Now the question is whether this is sustainable or no.
Right.
So if you look at the underlying drivers of free cash flow generation, the same has been led by improvement in working capital.
Got it.
And why do we think this working capital improvement will sustain? Is because the supply chains have now shifted from importing to domestic procurement. So during COVID, you would have seen a significant increase in logistic rates as far as imports is concerned. So that forced our Indian entrepreneurs to sort of shift the supply chain towards India. And that means that your cycle time of inventory has reduced from 3 months to 1 month.
Wow.
So why would that change, right? I mean, once you're accustomed to working on a lean working capital cycle, ideally it should sort of sustain unless there is any material deterioration which happens. And lastly, if you look at the promoter holding across small cap companies, it has increased from about 38% in FY17 to 52%.
Wow. That's
In FY23. So what the mistake people do is comparing the current multiples with historical multiples. But अगर चीज क्वालिटी में काफी improve हुई है, there is no point in looking at the historical multiples. So to that extent, we would argue whether small caps are really expensive or not. And is this the next decade for the country as far as small caps are concerned?
Fantastic. So what Bhargav tells us is three very simple things. One is debt to equity for the small caps is historically low, sub 2, sub 0.2%. And earlier the debt to equity used to be 1:1 or higher than 1:1. Number one. Number two is working capital cycles have become shorter. They have shrunk because of the domestic procurement, and because of which the efficiency in the free cash flows has just multiplied, and result of it, the debt to equity has reduced. That's number two, and that's irreversible. And the third thing is free cash flows is turning into the profitability of the businesses, and profitability in the businesses mean that promoters are getting more money in their kitty in the form of dividends or money back to them, and that's why they are buying back. And hence what the last point Bhargav argued, that now it is 52% ownership in the small caps. So remember, this is a decade for small caps. You shouldn't have a FOMO feeling if you miss out on capturing this opportunity.